Hi, this is Mark with my analysis for the week commencing the 2nd of June. Before we start this week's analysis, just want to recap over what happened last week and say welcome to new members. If you're completely new to Forex, then please don't get confused about this chart. There is a lot of information on here, but I do have equally very simple charts that I work from as well. This does take time to learn, but this is my long-term preferred method. Now, after last Friday's market close, I went into great detail last Sunday explaining why I was going to look to long at 9600 after the market open. And this was to do with many technical reasons and head and shoulders patterns and things I will explain a little later. But that was the entry, and what I said was I was going to go down to smaller time frames, and at the market open I was going to sit there and see what it did. And if it gapped lower than 9600, I would take the trade, and if not, I would simply take it from 9600. And what did it do? And I recapped on this on Wednesday. This eventually went 170 odd pips. So that was a week's target plus from a move planned on a Sunday evening. Yet I still get emails from members saying they didn't take it because they were scared. But here, if you're going to plan the trade and trade, you must trade the plan. And here you had 4-hour candles. You had 16 hours on Monday to decide whether to take this trade or not. Anyway, that was the trade of the week for me. Another decent trade. This was the previous Friday's market close when price was up around 150-100. They said one option on the British pound was a pullback to 150. And what I do with my trading, I place my entries 10 pips above for a long and 10 pips below for a short. And the reason being, price often doesn't quite get down to the area. And in this case, price got down to 15007, and therefore had you placed your order just at the whole number, you would have missed this trade and the opportunity to make 200 plus pips, once again from a move planned at the weekend. If price comes down here, I intend to take this trade. Other things that we were looking at last weekend, I was showing you how on the Aussie dollar I was looking for a potential bounce. I showed you how the week before where I was looking at 9600 for a bounce trade. Now this is counter trend, not my usual method, but it went 170 odd pips the week before, and therefore we were looking for the same thing again. And what happened? On the Tuesday, price came down, touched 9600 and bounced up to 9670. And again, if you look back on Wednesday's update, I explained why this was the logical area for me not to be greedy, why this was the logical area for price to stall. And it stalled there, and it stalled there as well. Now I then also on Wednesday went into great detail explaining about potential trades with this, and that the daily was the more conservative. But once again, if you're trading off a 4-hour chart, you wait for the candle to close, and therefore you didn't long it here. As the week progresses, it then gets messy. But as I said, have a look back at last Wednesday's update where I explained in great detail potential further trades. But that was the simple trade. So by Tuesday, I had made my target plus for the week and really should have walked away, because I then spoiled it later in the week with a short on the Euro USD. I showed when price was down here how I would be looking to short the Euro USD again. Done it twice in previous weeks, and it actually did it a third time back here. So we had 3 successful runs at this, and therefore probability said that it would happen again. And I was further convinced of the fact that this should be a good move because I've got EMAs behind it, I had a fib behind it. So I have multiple reasons why I was looking to short the Euro USD at the same point again. Now on this occasion it failed. Price simply ignored it, shot through, and that was the end of it. However, you have to get your head around it with Forex. Nothing is set in stone. Just because logical reasons and because traders all over the world are looking at 130 and everybody thinks it's going to hold, it doesn't mean it has to do. But at the end of the day, you are looking for probability, and probability said that was the area to take that trade. What I did say to you last week, I wouldn't look to long the Euro USD unless it broke above the 130.70 area. And if we've got a trend line here with 61.8 fibs, so at least that kept you out of a loser. And on the subject of keeping out of losers, I explained why I was very wary and was not going to trade the Aussie dollar yen, because it looked to me as it was going to pull back further. We have been in a big uptrend on this pair, but I just had this feeling it was going to turn back down, which it did, and as did the euro yen. My saving grace after the euro loss was I did get another win on the euro GBP, and once again you're looking at probability. We were looking at 8600, and therefore you place your order at 85.90, and on Wednesday, for example, it's only got up to 85.94, so this is another reason why we go 10 pips below, and you had the opportunity to catch this Wednesday or Thursday for a move back down. And with the euro pound, because the average daily range is only 50 pips and most of the pairs I trade are 100 plus, I double my stake on this pair. What I did like about this trade was you only needed a small stop, as I explained last Sunday, and you have the potential reward of getting down to 8,500, because in recent weeks we have bounced between the two. On to this week's analysis. We have just had the monthly candle close, and you need to get in the habit at the end of the month is go through the monthly charts and have a look at the patterns, look at the candlesticks and look at trend lines. This is the Euro USD on a monthly chart, and what we were looking at in recent weeks was this 12800 was the main area of interest because of the fact it was a previous trend line, and see going back into 2012 how price has failed to break this line, and it failed to the pip last month to break this area. Had it made the break, then we were looking for a potential big move down, but we don't learn anything from this particular chart from a monthly. This is the Euro USD on a weekly chart, and I showed you in recent weeks how we have what is known as a head and shoulders pattern on here. If you're completely new to Forex or you're not familiar with this, then have a look at my previous post on the subject where I explained in detail, but briefly, just to recap, what happens is traders all over the world will be seeing this pattern. You have the head, you have the left shoulder, you have the right shoulder. You then look for a neckline and you look for a trend line, and the theory goes you measure from the head down to the neckline, which is 600 or 700 pips, and the theory is that if we get a break below this area, you then look for a pullback because the move should be replicated, and therefore we should be on for a 700 pip fall if this line breaks. And what I like about this at the moment, it also intersects with 12800, which is a whole number and major previous support and resistance. So this area is crucial for me on the Euro USD, and you can look to take a bounce trade back up, and with that being counter trend, then usually I recommend you go half stake, or if it breaks and closes below here, then as I just said, you look for a pullback to 12800, therefore 127.90, with a view to a short. Now, I try wherever possible to make trades placed from weekly charts, and the plan for me, I do my analysis on a Sunday. I spend 3 or 4 hours doing it and checking on the news and looking at technical analysis, and wherever possible I want to place my trade on a Sunday evening just after the market opens and walk away. However, it doesn't always work. Some weeks if you only did that you would never get a trade. So what I do is I'll now analyse daily and 4-hour charts for those of you who wish to trade intraday. This then is the Euro USD on a daily chart. I would not touch this at the moment where it is. It is teasing us by closing fractionally below 130, but that was a major line in the sand. There's all these EMAs in the way, there's a triangle, it's just too messy for me to trade from a daily chart. This is the British pound on the monthly, and what you will see here is what's known as a tram track pattern. This candle has now closed, and when you have two candles like this, this is an indication that price may be about to turn back down again. The main thing on here at the moment, the area that hopefully is screaming at you because we are looking for multiple reasons, is a potential bounce back up again at 150. We have 78.6 Fibonacci, we have a trend line, we have a whole number, we have previous support and resistance, and 150 is huge on the pound. 150, 160, 170, all important numbers, but 150 is huge psychological level. So my first strategy for the week with this one, if we get the pullback down here, I will take a long. If that trade fails, and price breaks and closes below on a daily or 4-hour candle, I will then look to short. And what you have to realize in Forex is you do not win all the time. You can make all the plans in the world and then the trade can come along and fail. But we always look for a minimum 1 to 2 risk-reward ratio. And therefore, if you're risking $10 to win 20, it doesn't matter over time as long as you have more winners than losers. If you have better risk-reward ratio and you can get trades at 1 to 3, 1 to 4, 1 to 5, you can even lose more trades than win and still be profitable. 150 is huge. If it does break this area, then we could be on for a big move down on this pair. Further option with this pair is if price gets up around this trend line, and this is looking from weekly analysis, then anywhere around 154.00 I would be interested to short, because it is a previous area of support and resistance, and this trend line goes back to the beginning of the year, and we've got the EMAs just behind it. Finally, a simple method here. If you're trading off 4-hour charts, then I showed in recent weeks we were looking at shorts at an upper trend line and it won on 4 or 5 occasions. Then it lost last week. Then what happens? Price starts to go in an upwards direction. So the way that you play it, you put your trend lines in, you put in any other indicators that are useful, and we have a 55 EMA just in the area. It's 61.8 fib and the trend line, and therefore if you're going to be sat watching your charts as the market opens or you're trading, then look for potential trades along this trend line as the week progresses. This is the dollar Swissy on a weekly chart, and we had an inverse head and shoulders pattern here. This was the head, left shoulder, right shoulder. The measurement between the neckline and the head was a few hundred pips, and it did do it. And I showed you earlier how this trade won again last week as well. Now it's broken below the trend line, so what do? Well, you could go against the trend on this one, but it has been a fairly strong trend in the last few months, or I'm going to prefer this one on the daily. And on the daily, we have a daily trend line in place. We have a Bollinger Band that's pointing steeply upwards at the moment. We have a weekly 55 EMA. We have a daily 200. And there is some previous support and resistance, and therefore there are a lot of things going on in this area. And what you're looking for is, if price has been moving in an upwards direction, we look for pullbacks with a view to then continue with the trend. If it breaks 78.6 fib, then, and this trend line, then I start to think about a short. But until that happens, that is my preferred area to trade. Equally, those of you interested counter trend, this did it already on Friday, but you've broken below 9600, which was that major area, so you could consider a short at 9600. Personally, I will watch that at the market open. This is the euro pound, and the euro pound, I said last week I was wanting a pullback to 8500 was the ideal, and again we have multiple reasons. And notice with this pair how price stops at the whole numbers. 8400 was very important, 8500 was important, and last week 8600. And therefore, again, this is the main area for me. It is 50% fib, we've got the EMAs, it's the whole number, lots going on, and price has simply in recent weeks been bouncing between these areas. I would also look for a counter trend short again at 8600. Aussie dollar on a weekly. Now, last year and earlier this year we had some phenomenal trades on this. We were simply shorting at this upper fib area here and long fib areas down here, and the win ratio was awesome. Price fell off the cliff 3 or 4 weeks ago on this pair, and last week we had bounce trades on a number of occasions back up again, but late on Friday price has finally broken below 95.80, which is a very important area. Therefore the bias is still to short. The more aggressive amongst you may look for a pullback here with a view to a short, but I am very wary on this pair now. This is a major move, and normally when you get big moves like this you get a big pullback to go with it. And the fact that this closed below this area late on Friday is another thing that puts me off with this trade. And the other part of the equation why I'm very wary with this to take the trade in its current position, the Aussie dollar and gold are closely linked because Australia is a big producer of gold and very close to China, one of its main markets. And gold has bounced off this area again and started to turn back up. Equally, silver, which was trying to break its low, has not done so either. And therefore I'd be very wary with the Aussie dollar in its present position. However, I will be interested to short at 96.70. Now this monthly EMA may have moved down a bit by Monday because of the candle closing at the weekend, but anywhere around here I would be interested in the short. And therefore let's go back to the daily. You're looking for here, you see 3, 4, 5 occasions this EMA has moved down as time has progressed, but this has been a very important area, and therefore that would be the area for me at the minute. I'm just not keen on 9600 for reasons just stated. CAD, the dear old loonie. This is a monthly candle, and the monthly candle has stopped to the pip at the 55 EMA, and the 55 EMA has not been broken since 2009. And look how in 2011 it came up and touched it to the pip on the monthly chart, and last week it's closed to the pip at the monthly 55 EMA. So it is a major important area. This pair is not for beginners. It's a very messy pair. It tends to bounce all over the place, very erratic and difficult to plan. The main area on this is if it comes back down to 100. A few weeks ago I said to look to enter 100.20, and we just caught this trade, and it's still 370 pips in profit at the moment. What you can do with this pair is if you get a break and close above, say 1045, 1050, think of potential longs, but a preferred one, as I said, is here. The more adventurous amongst you, if you're trading intraday, can be looking to short at 104 and long at 103 area, because this, as you can see, the last 10 days is where we've been bouncing. And if you're going to start looking for trades intraday and you're looking for bounces, I look for candlestick patterns. So here was a good example. Price came down, it was sticking on an EMA. You've then got this sideways movement of indecision candles here. That would give me confidence to long, and also you would have had the confidence to short at this point here. So that's what you do, is you wait for candles to close and look for clues. But once again, as many reasons as possible for why to take a trade. You wouldn't take a trade just from a candlestick, and you wouldn't take a trade just from support and resistance. Finally, onto the yens. I explained last week why I didn't fancy the Aussie dollar yen and the euro yen, and hopefully that kept you out of losers. This is the dollar yen, and I explained the last few weeks we had big clues with this. Price was clearly in an uptrend, and yet MACD was pointing down, was a clue we might be on for a turn, and price clearly struggled at this upper area and failed to break. Then we got this 5-8 cross. So there were lots of reasons to suspect that the dollar yen was going to pull back, and this has been a major move that was set in place by the Bank of Japan, weakening their currency deliberately, and therefore everybody on the planet wants to buy into this pair. The difficulty is, where do you get in? Well, 100 was and still is an important area, and if you're trading on a 4-hour, look for it. But the main one for me on this now, from a forward order on a weekly, I am interested to long down here around 98.70. We have 55 EMA, we have a daily trend line not far behind, we have a 78.6 fib, and therefore I only need a small stop the other side of this lot, 60 odd pips, and there is a potential gain here of 500 odd pips. Look at that middle figure, ignore the 0, 570 pips, guys. So a risk reward ratio of 1 to 9, I will definitely long the dollar yen in that position. The other two yens are much more difficult to calculate. We broke 97.40 on the Aussie dollar yen. If you're going to be counter trend and be brave, then you look for a pullback there for a short. I don't fancy it, and from a long, I have no idea at the moment. I'm simply going to leave it. On a weekly, we'd had an indecision candle at the top of a move the other week. Last week's candle is a reversal candle, so we could be on for a move back down again. And again, if the euro yen is going to pull back, I'm really going to be looking for a major one on this, guys. So for now, I'm going to leave that and wait and see as the week develops. Final option, of course, if it breaks the high, then you start to look for a pullback with a view to a long. Not as easy this week. We've had some rather simple weeks in recent weeks. Murphy's Law, we have lots of new members with us at the moment, and there are not too many rabbits to pull out of the hat today, but I will be back with you on Wednesday. We have a special guest presenter with us tomorrow whilst Dean is away, and Pierre will be with us on Tuesday with his detailed analysis. Have a good week.